preference share premium should be paid out of equity share premium. If equity share premium is not available, you have to utilize profit and loss account. A fresh issue of 6,000. So they have issued the share. Issue the share, for the balance create the CRR. What's the total amount available? 96,000. How much loss we suffered? 10,000. How much available in here? 86,000. Hello my dear students. I am Dr. B.S. Subramaniam, called by name BSS, Professor in Commerce and Management, Vidhyaashram First Year College at Temple of Excellence, MYSURU. Today, in this session, I am going to hand Advanced Corporate Accounting 4th semester, Unit 1 and Session 4 in favor of redemption of preference share. I already told in the last session, there are two types of share. One is called equity share, another is preference share. Which are the two types are? One is equity share, another preference share. Equity shareholders are permanent shareholder, whereas preference shareholders are temporary shareholder. Equity share cannot be paid back till the company liquidate, but preference share can be paid back after a stipulated time, maybe 5 years, 10 years or 15 years. It should be paid either at par or a premium, but not at a discount. I will repeat, preference share can be redeemed either at par or a premium, but not at a discount. It should be fully paid off. Partly paid should not be redeemed. This is the law. We will move on to problem now. Following is the balance sheet of Group A Limited. Here they have given the balance sheet. So this asset side. In the liability side, you have to see that 3,008% preference share each, 3 lakh. It is going to be redeemed. 40,000 equity share already existing. Security premium is existing. Then general reserve, profit and loss, creditor and bills payable. It was decided to redeem the preference share at 10% premium. The company took the following step. So the preference shares are this one, 3 lakh. It is going to be redeemed at 10% premium. 10% of 3 lakh is 30,000. Now we are going to pay 3,30,000. For that, a fresh issue of 6,000 equity share of 10 each at a premium of 4 was paid. All the investment were sold. It arranged the bank over to tell him. Only 2 points to be remembered. I will tell you what are the 2 points are. Sources of funds. One is general reserve. Sources of funds. One is general reserve. Number 2, profit and loss. These are the two sources are from that. What you have to remember, whether there are two types of share issued. For the balance of redemption, you have to create a CRR with the two sources of fund. General reserve and profit and loss account can be utilized. Preference share premium should be paid out of equity share premium. If equity share premium is not available, you have to utilize profit and loss account. So this point to be remembered very well. Whether they issue the share, then create the CRR. If they not issue the share, first create the CRR, then issue the share. What are the 2 steps are? Create CRR and issue the share. So steps. Issue the shares. For redemption. And then create CRR, capital redemption reserve, or create CRR, and for the balance, of redemption, issue the shares. This is important. So what are the steps to be followed? When you want to redeem the preference share, here, first issue the share for redemption and then create CRR. Or create the CRR. If they ask, if you are not in a position to issue the share, first create the CRR and for the balance redemption, issue the share. The steps are issue the share, create the CRR, or create the CRR, issue the share. First step, issue the share, create the CRR, create the CRR, issue the share. Depends upon the problem. Here, preference share is how much here? 3 lakh. Preference shares. $3 lakh plus 10% premium, 30,000. So totally we require 3,30,000. Your face value is 3 lakh. Here, face value 3 lakh. Premium totally 3,30,000. What are the steps company is taking? You look after. Now, a fresh issue of 6,000. So they have issued the share. Issue the share. For the balance, create the CRR. How many share? A fresh issue of 6,000 equity share at a premium of ₹4, which was paid in full. Issue entry for that. Bank account debtor 6,000 into 14, 84,000. To share capital 6,000 into 10, 60,000. To share premium 6,000 into 4, 24,000. So what's the face value received for 3 lakh? 60,000. What's the balance to be left over? 2,40,000. We have to create the CRR. Then here, what is the next step? They ask, all the investment were sold for 1,10,000. What is the investment value? 1,20,000, which has been sold at 1,10,000. Entry, bank account debtor 1,10,000. Profit and loss account debtor 10,000. We suffered a loss of 10,000. To investment 1,20,000. This amount should not be utilized for redemption. This is only entry to raise the cash at bank. I will repeat. Any asset sold should not be utilized for redemption. It's only for to raise the cash at bank. Then we are transferring entry. One point here you have to look after here. Here we have to create the what's called general reserve CRR to the extent of 2,40,000. But here, see the question here. Your profit and loss account is 96,000. By selling the investment, you suffer a loss of how much? 10,000. So, here your balance sheet shows how much? Your profit and loss account is 96,000. Out of that, how much loss we suffer? 10,000. How much available? Only 86,000. I will remember. What is the total amount available? 96,000. How much loss we suffered? 10,000. How much available in here? 86,000. In the reserve, how much available? 1,20,000. Create the CRR to that extent. General reserve account debtor, profit and loss account debtor to CRR account to the extent of 2,06,000. Actually, the balance amount will come. You want how much money? 3 lakh. So out of 3 lakh, 60,000 capital, or how much you require? 2 lakh 40. How much CRR available? 2 lakh 6,000. How much shortage? 34,000. We'll come back here. If you see that your balance sheet, your security premium is 40,000, but you are paying how much money? 30,000 only. By issuing the new share, how much you got the premium? 24,000. So 24,000 is there, this premium. Then here, come back here. Your already available premium is how much? 40,000. Out of 24,000 rupees you utilize, how much premium is you are going to pay? 30,000 you are going to pay. So you got 40,000. How much you pay? 30,000. How much available? 10,000 plus new premium 24,000 means it becomes 34,000 now. I will repeat. 40,000 is available. Utilize for redemption 30,000. How much available? 10,000. New issue premium 24,000. It becomes 34,000. So you create the CRR 2,06,000. Equity share premium available is 34,000. It becomes 2,40,000 rupees. Now issue the share. This entry you create 2,06,000. Redeemable preference share. Here, redeemable preference share capital account data, redeemable preference share premium account data to redeemable preference shareholder account. Transfer entry. Now, paid off. Redeemable preference shareholder account data to bank account. Create the CRR. Then, preference share premium will be paid out of the equity share premium. Equity share premium account data to redemption of preference share. We have redeemed. Now, come back. How much available in the cash at bank? If we see your balance sheet, what's your cash at bank? 36,002 balance breakdown available. By issuing the share capital, you got 60,000. Issuing the share premium 24,000. Your investment is sold for 1,10,000. But you redeem how much money? 3,30,000. That means there was a shortage of 1 lakh rupees. If you add all these things, no? Here, how much here? 60. 6 plus 4, 10. 1 plus 3, 4. 6, 10, 12, 13, 1. So there is a short. If you add all these things, no? It will come 2,30,000. You are redeeming 3,30,000. So there is a shortage of 1 lakh. We took a loan from the bank in order to pay. How much loan you have taken? 1 lakh. It's called bank overdraft. How much you are paying? 3,30,000. How much available? 2,30,000. How much shortage? 1 lakh. We took the loan from the bank to the extent of 1 lakh. Then come back to final balance sheet. Here, plant and machinery remains the same. Building remains the same. Furniture same. Investment won't come because it has been sold. Debt are same, we are same, cash is same, cash at bank won't come because it has been fully utilized. Come back here. You already having the 40,000 equity share plus excess 6,000. Okay, it becomes 6,000 into 10, 60,000, 4 lakh plus 60,000. So it is 4,60,000. Then reserve and surplus. Share premium already existing, how much is there? 40,000. By issuing the new share, 24,000. Totally it becomes 64,000. Redeem, utilize 34. How much available? 34,000. You create the CRR with the help of general reserve and profit and loss account to the extent of 2,06,000. Totally it becomes 2,40,000. Another 60,000 by issue of share. Come back here. Current liability. Creditor available 80,000, BP available 40. You took the bank overdraft 1 lakh. Totally it will tally for 9,20,000. 15 marks question. I will repeat once again. Here you have to see that once again. 6,000 equity share of 10 each means 60,000 at a premium of 4. 6 into 4 is 24,000. So 84,000 you got. So this is the 60,000. You have to create the general reserve to the extent of 2,40,000. But you created only because available is 2,06,000. Remaining balance we have utilized from the security premium. Come back here. By selling the investment, you suffered a loss of 10,000, 96,000 available. Out of that loss is 10,000, balance is 86,000. We create that. You have to pay 3 lakh, premium 30,000, 3 lakh 30,000. Equity share premium, preference share premium will be paid out of the equity share premium to the extent of 30,000. This is transfer entry, backside. Preference share capital account data, preference share premium account data, preference shareholder account, you pay back preference shareholder account data to bank account. Preference share premium has been paid out of the equity share premium to the extent of 30,000. Then we want to say that how much available in the cash at bank, already existing, how much is there? 36,000. By issuing the share capital, you got 60,000, premium 24,000. By selling the investment, you got how much? 1 lakh 10,000. By redemption of preference share, 3 lakh 30,000. How much shortage? 1 lakh. We took the bank loan, bank body to the extent of 1 lakh. Now come back to balance sheet. Machinery remains the same. See that balance sheet? This remains the same. This remains the same. This remains the same. Debt are same. We are saying investment won't come. It has been sold. Cash at bank has been fully utilized. What's the balance is 16,000. Here, preference share have been redeemed. 40,000 plus 6,000 become 4,60,000. Security premium has been utilized. 40,000. Redemption 30,000. By new issue 24,000. It becomes 34,000. General reserve will be utilized. P&L account has been utilized to the extent of 86,000. Creditors remains same. BP remains the same. Come back here, balance sheet. See that? Building same. Machinery same. Furniture same. Investment sold. Debt are same. B are same. Cash remains the same. There is no cash at bank. It is fully utilized. Come back here. For 4 lakh plus 60,000. It is 4,60,000. Share premium 40,000. By issuing the new issue 24,000, it becomes 64,000. How much utilized for redeem? 30,000. How much available? 34,000. So capital redemption reserve 2,06,000. Totally it becomes 2,40,000. Then creditor 80,000. BP 40,000. You took the bank loan to the extent of 1 lakh. Totally it will tally for 9,20,000. Hope you understand. This is a problem for 15 marks. Definitely one question will come from. So there are 2 questions they are going to ask. One for 10 marks, one for 15 marks. Totally 25 marks is coverage. Very, very easy. First you have to learn only 2 points when reading whether they create the CRR. For the balance you have to create the issue the share. When you issue the share, for the balance of redemption, you create the CRR. CRR can be created only with the help of general reserve and profit and loss account, which are the sources of funds we say. Hope you understand. I solved the 3 what's called 10 marks question already solved. This is a 15 marks question. Definitely it will come very easy. You learn these 2 points. Issue the share, create the CRR. Create the CRR, issue the share. Hope you understand. We'll come back with another next session. 1 or 2 problems. Same way, I will solve about 5 problems about the redemption. So if you have a doubt, you can ask me any day. Make a comment on that YouTube. We'll get the answer. Till then, goodbye. Meet in next session with another problem. Till then, goodbye. It is your BSS.